Good morning, traders, and welcome to the weekend update here for Sunday, March 10th, 2024. Got 4 positions open at this point. If we do get a little bit of a continued pullback this week, which I think we might, I will look to add a new position. Most likely, it will be a broken wing butterfly, kind of like this initial one. So this trade was adjusted this week to raise this right wing a little bit further. Now, it was done just before the Friday sell-off, which is why it's showing a little bit of pressure. But if we look into this in a little more detail, we'll see that pressure was essentially a little bit of an increase in volatility. And if that volatility drops out of this, this will very quickly get up to a very nice profit. So our volatility, though, and the drawdown may continue a little bit, which again is going to show this as having a little bit of stress. But the closer we get to expiration, the more this T0 line is going to come up back to this line. So again, while there is some possible stress that's going to show in this, it really isn't overly concerning. I mean, obviously our break-even point at expiration is all the way down here at 49.17, so quite a ways away. And if our market does continue to move down, this may require some additional adjustment. But if it's a little bit down, not overly concerned about it, and then as that volatility releases, again, this will get to showing some decent profitability. I did, when I adjusted this trade, I left it with a higher level of positive delta, again, with the expectation that we are in a strong up market. And we'll see what I mean by that in a minute when we take a look at some charts of our current market conditions. So coming back to the graph, we've got this one in rut. Now, this has had to be rolled up. This entire tent has had to be rolled up, and rut continues to get pressured on the upside. As we get closer to expiration, our one long call right here tends to weaken a little bit, creating a valley of death. The closer we get to expiration, the more pronounced this is going to get. So this is a trade that hopefully will get a little bit of a pullback in rut, which again, we'll look at the charts in a moment, and I think that is a possibility here. And I will be looking to probably thin this thing off or thin it out considerably to where this long call kind of flattens out. The T0 line will flatten out up here. That means maybe taking a butterfly or two off. Another possibility is just removing one of the long or call sides, or excuse me, the long put side of this butterfly. So that may be a possibility as well. I'll look at those things this week as we progress. This particular trade in SPY, I think it looks perfectly fine where it is, just waiting for some more theta decay to come in. So everything's all good on this one. Apple, I am still bullish on Apple based on all the information I'm seeing, but Apple was taking some heat because they weren't using the AI word that everyone else is using. Apple tends to use the term machine learning, which is largely the same thing, but because our world is used to the term AI, and Apple isn't using that AI word or phrase so much, a lot of people feel that they've fallen behind. And again, Apple often does, I don't want to maybe use the term fall behind, but they like to study the market, see what everyone else is doing, and then come out with something that might be improved beyond what others are doing. Of course, whether that happens or not remains to be seen. And because it didn't sound like they were doing their thing, the Apple had a significant sell-off. Now, it did start to show some strength here a little bit on Friday. In the market sell-off, I think actually Apple held its own. And then on Thursday, I think it actually rallied up a little bit, if I remember correctly. So I do need to be careful of a big bounce up in Apple. So if Apple looks like it's going to stabilize in this general area, I may start to thin some of this side here. Again, making this a little bit more positive delta possibly, expecting that Apple bounce to maybe happen. So I've got to be a little aware of what might potentially happen here. In retrospect, this might have been a trade that would have been better. Again, always like to learn from what I had done. Might have been better to phase into this. I have no problem with selling the put spread when I sold it, when Apple pulled back to that 180 range. But maybe that would have been a good point to enter one or two spreads and then see how it reacted. Then in a sell-off down to 175, maybe sell another two. So maybe phase into that might have been a better scenario here. But I did not do that. And so, we'll figure out how to address this as time progresses. But right now, it's in a fairly okay state, waiting for volatility release. When volatility releases, this will show some more profit fairly quickly. Obviously, if volatility does not release and Apple sells off harder, got to pay attention to that, and or Apple moves up rapidly, got to pay attention to that as well. But I don't see it, again, we can get all the way up here to 180 or so before it starts to really hurt this position. So I've got some room here to the upside before I need to address something. But of course, I do need to watch out for a big jump, if you will, in Apple. So those are the current open positions. So now I want to take a look at the market itself. So the first thing I want to look at here, again, I tend to look at SPY because we can see volume in SPY, and volume tells a bit of a story from my perspective. So SPY, again, the reason we can see volume in SPY and you can't see volume in SPX, for example, is SPX is all options and there isn't an underlying in SPX. So there is an underlying in SPY, so we can see how many shares of SPY stock traded, or SPY ETF traded, and we can see here that in that sell-off on Friday, there was a little bit of a spike in volume. That kind of tells me that the weak hands, if you will, were starting to sell a little more as the market sold off during the day on Friday. That is a little bit of a sign of weakness. Now, all that said, take a look at these two lines right here. This is a channel, and since about middle of November of last year, we have really adhered well to this channel on both the upside and the downside. Of course, the SPX is going to look exactly the same here in a channel. I just happen to have the channel drawn here on SPY. And so we keep hitting the top of this channel. We are making higher highs. We're also making higher lows. Okay? So my expectation here is it would not be at all out of the realm of reality that the SPY pulls back to 500 or the SPX pulls back to, the 5,000 range or 505 range, 50-50 in the case of SPX range, before it were to potentially bounce back up again. What we're watching for, because this is a pretty established channel right now with, what you might consider 1, 2, 3, 4, 5, 6, kind of a seventh, bottoms on it in this channel, that's establishing a fairly well-developed channel that a lot of people are going to see and recognize. So if this channel breaks, if we get a breakdown through here and we close below here, and then I'd look at that as a pretty strong conviction of the start of a down move. But I really wait till the following day to see if it does in fact continue down from there. See, like you can see this one came down to the bottom of the channel. It opened right on the bottom of the channel. It ran all the way down, broke the channel, but by the close at the end of that day, it was right back up inside that channel. So that kind of told me that, all right, this might be stabilization at the bottom of the channel and not a break of the channel. And that is, in fact, the case. Same thing here. Sold off really, really hard, came down to the bottom of the channel, but I wanted to see what happened the next day. So that's kind of what I want to see is, if this channel breaks, or I should say when it breaks, it will break either to the downside or the upside. But when this channel breaks, I don't want to watch just the day of the break and see where we close, but I want to kind of look at the follow-up action the next day. So again, SPY, very strong channel here, still in the uptrend mode. Let's take a look at SPX. Same thing here. Again, this is kind of the bottom of that channel. Now, I have a bigger, basically an oversized channel here that I've had marked out, and we were punching out of the upside of that channel a little bit. So I will adjust that just a little bit here to show our wedge. And a wedge is a bullish pattern, particularly a rising wedge. Some people call them a rising flag. It is a fairly bullish pattern. And our volatility is still fairly low, which oftentimes indicates that there is more movement yet to take place to the upside. That said, I'm going to show you something here that, tosses a little cold water on that, and that is looking at the VIX. So our VIX, the volatility index, you can see we're making higher lows, and we're also making some higher highs. Now, in VIX, that means that volatility is starting to get a little bit higher on average. Volatility, of course, is a measure of fear in our markets. And this is fairly typical as the markets get more and more elevated and more people think this thing's overextended, this thing shouldn't be this high. I've had great gains on my positions, my long positions. I want to start buying some protection, buying some insurance on them in case of a big market sell-off. As those people start buying more and more insurance, they start buying puts to hedge a potential downside move. That is what basically shows this VIX as rising. That's where volatility is creeping up. And it's a result of that buying of insurance. The more and more people that start buying insurance, the more that basically is telling us that there is some fear starting to creep into the market. For those of us as options traders, that's good. We want to be able to sell our options for a higher value. So when fear comes into the market, many of the types of options trades that I share, they do a lot better in a more volatile market and higher volatility environment. So this is a good thing for putting on new trades. It puts a little pressure on some of our existing trades, which is why RUT, for example, has not become profitable, that RUT butterfly with a long call. Normally that would be a good profitable trade by now if our volatility, if we put that trade on when volatility is a little bit higher and volatility dropped out. Because we put that trade on in a lower volatility environment and volatility has continued to creep up a little bit, that's depressing the profitability in that trade and pretty much any butterfly or income style trade you might have on where you have sold a condor, a butterfly, things along those lines. So volatility is starting to creep up a little bit. As fear creeps up a little bit, that means that, there's more and more people thinking that, we might be, reaching a little bit of a peak here, and we might be looking at a sell-off coming in. So that is SPY, SPX, and VIX. Let's take a look at the RUT now. So if we look at RUT, RUT broke out to an all-new high. I can extend this trend line. RUT continues to adhere to this trend line quite well. Also, let's see it. Rather than moving that whole trend line, I just want to extend that trend line. There we go. So not out of the question here that RUT could drop back down to this, 20-25 range, somewhere in here, hit this trend line. Or the more likely scenario is because we had some support right here at 2050, maybe it comes down to 2050 and bounces back up. But I would expect at this point that RUT may pull back a little bit more, but will probably start to stabilize, maybe a little sideways chop here. We can also look at the volatility on RUT. That symbol is RVX. And where VIX is the volatility of the S&P 500, RVX is the volatility of the RUT. we can see the same basic pattern here. Volatility in rut is starting to pick up. And again, that's what's kind of depressed the profitability in that rut butterfly that we have on. Had we put that butterfly on up here, and then our volatility was down here, that position would show profitability much quicker, much faster. So that's also why we tend to keep size small and in fewer positions when volatility is lower, because most income type trading is much, much better to put on in a higher volatility market where we're expecting volatility to drop or to decrease. That's when those positions work the best and work the fastest. And as a result of that, where I normally might carry, 5, 6, 7 positions, and I might use maybe half of my account, maybe 3/4 of my account in a high volatility environment. In a low volatility environment, I might only use about 1/4 of my account, maybe up to about 1/3 of the account, because I just need to maintain those positions smaller because they don't act well as volatility increases. They act much, much better when you can put them on in a higher volatility and then volatility drops out of them. So that's what's happening with RUT and the RVX. So that should give you a fairly good rundown on the overall market outlook at this point. We're obviously still in a strong uptrend, but as volatility is increasing and we're hitting higher highs, higher lows, there is the possibility and likelihood at some point here before too long that this trend line is going to crack. When that trend line cracks and we make a lower low, that's the first step in a trend change. Then if we rally up and we don't break our old high and then we reverse and make another lower low, that basically is a trend change. That's what we want to look for right now, is if and when that trend change is going to happen. So when that does happen, volatility is going to spike further. That's when it becomes a little more beneficial to put on more butterfly style trades, or what I call theta decay trades. Once we can sell those short options at a premium price because of the fear in the market, and we protect ourselves in by buying some longer things further away from the money, that's when income trading kind of comes into its own, or theta trading as some people might call it. So with that, I'm going to wrap things up here for this weekend update. I'll look forward to seeing you all in the community. Anyone that would like to know more about the community, how everything works, just look for the link below here in YouTube. And I guess that's it for now. Please like and subscribe. Let me know if you have any thoughts or questions. Take care.